In the digital wilderness of 2009, an enigmatic figure known only as Satoshi Nakamoto unleashed a revolutionary form of currency. Unlike anything that had come before, Bitcoin emerged without the backing of any government or centralized authority. It was a currency born from code, operating on a peer-to-peer network that promised to bypass traditional financial institutions entirely. Bitcoin's foundations were outlined in a white paper that quietly circulated among computer scientists and cryptography enthusiasts. Initially, Bitcoin's arrival went largely unnoticed. It was a curiosity discussed in niche internet forums, where early adopters, mostly programmers and cryptography fans, experimented with the technology. Bitcoin's value was negligible, often traded for mere fractions of a cent. The virtual currency was more a novel experiment than a financial instrument, barely registering on the radar of the wider world. But then, an event that would become legendary in cryptocurrency lore took place. In May 2010, a programmer made history by purchasing 2 pizzas for a staggering 10,000 bitcoins. This transaction, now commemorated annually as Bitcoin Pizza Day, marked one of the first real-world uses of the digital currency. At the time, those 10,000 bitcoins were worth about $41. Fast forward to today, and those pizzas would have cost millions. As word of Bitcoin spread through niche online communities, its price began to climb, albeit slowly. By 2011, Bitcoin reached a significant milestone, climbing to $30 per coin. But this newfound value was not to last. The first major crash struck soon after, sending the price plummeting by over 90% within months. To many observers, it seemed Bitcoin's brief moment in the sun had ended. Yet, beneath the surface turmoil, the Bitcoin network continued to hum along seamlessly. Blocks were still verified, transactions still moved across the blockchain. The technology showed no signs of faltering. As Bitcoin struggled through its early days, a pivotal chapter unfolded in the form of Mt. Gox. This single exchange dominated Bitcoin trading, handling the lion's share of global volume. But in 2014, a catastrophic failure struck. Mt. Gox halted withdrawals and declared bankruptcy, revealing that approximately 850,000 bitcoins had vanished. The collapse was a seismic event, shaking confidence in the nascent cryptocurrency market. News outlets around the globe questioned Bitcoin's survival, and prices tumbled once more. Yet, in the face of such adversity, something remarkable occurred. Despite the failure of a major exchange, the Bitcoin network itself remained unscathed. Transactions continued unabated, and new exchanges rose to fill the void left by Mt. Gox. The blockchain's resilience was on full display, proving that while institutions might falter, the decentralized network had a life of its own. Bitcoin's journey was far from over. As the years rolled on, the digital currency began to capture the attention of a broader audience. By 2017, Bitcoin experienced a meteoric rise, its price skyrocketing from under $1,000 to nearly $20,000 in less than a year. This dramatic rally sparked a media frenzy, with headlines touting Bitcoin as the next big thing. The world took notice, and search interest surged across the globe. But as history has shown, what goes up must come down. In 2018, Bitcoin faced another precipitous fall, losing over 80% of its value from its peak. Investors fled, and critics once again proclaimed the end of cryptocurrency. Yet, as before, the underlying system remained undisturbed. Miners continued to secure the network, and developers diligently refined the open-source software. Bitcoin's resilience seemed boundless. As Bitcoin navigated the turbulent waters of market volatility, something new began to take shape. Large financial institutions started to pay attention. Public companies disclosed Bitcoin holdings, adding it to their balance sheets as a treasury asset. Major payment platforms introduced cryptocurrency services, further integrating Bitcoin into the fabric of traditional finance. Despite ongoing volatility, these developments signaled a shift in perception. Bitcoin was no longer just a fringe experiment. It was a topic of discussion within the highest echelons of finance. Even as the market remained volatile, Bitcoin's decentralized nature proved its greatest strength. The network was maintained by thousands of independent computers worldwide, immune to the whims of any single company or central authority. This architecture allowed Bitcoin to withstand crashes that would have crippled traditional financial entities. As long as users continued to run the program and validate transactions, Bitcoin would endure. Here, in the intricate dance between volatility and resilience, lies the story of Bitcoin's survival, a narrative still unfolding, echoing through the corridors of modern finance. As Bitcoin continued its journey through the unpredictable waters of the global financial landscape, it became clear that this digital currency was more than just a passing fad. By the mid-2020s, Bitcoin had not only survived multiple catastrophic crashes, but had also become a cultural phenomenon. Its story was no longer confined to the niche circles of tech enthusiasts and digital libertarians. Bitcoin had entered the mainstream consciousness, capturing the imaginations of both the public and financial elites. One of the key turning points in Bitcoin's evolution was the increasing involvement of institutional investors. Hedge funds, investment banks, and pension funds began to explore Bitcoin as a potential asset class. This shift was driven by a growing recognition of Bitcoin's unique properties, its fixed supply, its transparency, and its potential to act as a hedge against inflation. As traditional investors started to allocate portions of their portfolios to Bitcoin, the digital currency gained a new level of legitimacy. The rise of Bitcoin-focused financial products further accelerated this trend. Exchange-traded funds, ETFs, and futures contracts tied to Bitcoin began to emerge. This financialization of Bitcoin marked a significant milestone, bridging the gap between the decentralized ethos of cryptocurrency and the structured world of conventional finance. However, Bitcoin's path was not without its challenges. Regulatory scrutiny intensified as governments around the world grappled with how to handle this new financial phenomenon. Concerns about money laundering, tax evasion, and the use of Bitcoin in illicit activities prompted many countries to propose or implement regulations. In some regions, these regulations were seen as necessary steps to protect consumers and ensure market stability. In others, they were viewed as attempts to stifle innovation and maintain control over the monetary system. Despite these regulatory hurdles, Bitcoin's underlying technology continued to evolve. Developers around the globe worked tirelessly to improve the scalability and security of the Bitcoin network. Innovations such as the Lightning Network were introduced, enabling faster and cheaper transactions. These technological advancements not only addressed some of Bitcoin's most pressing limitations, but also reinforced its position as a leader in the cryptocurrency space. Bitcoin's influence extended beyond finance, impacting sectors as diverse as art, gaming, and real estate. The concept of tokenization, fueled by blockchain technology, allowed for the creation and exchange of digital assets in novel ways. Artists began selling tokenized versions of their work, known as NFTs, bringing about a new era of digital ownership. In the gaming industry, Bitcoin and other cryptocurrencies enabled players to own and trade in-game assets. This merged virtual economies with real-world value. Moreover, Bitcoin became a symbol of financial sovereignty and empowerment, particularly in regions with unstable currencies or restrictive financial systems. In countries experiencing hyperinflation or economic turmoil, Bitcoin offered individuals a way to preserve their wealth. This use case underscored the potential of Bitcoin as not just an investment vehicle, but as a tool for economic freedom. Yet, Bitcoin's prominence also attracted the attention of skeptics and critics. Environmental concerns about the energy-intensive process of Bitcoin mining sparked debates over sustainability. Critics argued that the carbon footprint of mining operations was a significant drawback, especially those reliant on non-renewable energy sources. Proponents countered that the network was increasingly powered by renewable energy, and that the decentralized nature of Bitcoin offered benefits that justified its energy use. Throughout these discussions, Bitcoin maintained its enigmatic allure, a digital currency rooted in both technology and ideology. Its pseudonymous creator, Satoshi Nakamoto, remained a mystery, adding to the intrigue and speculations surrounding Bitcoin's origins. Some believed Nakamoto was an individual. Others theorized it was a group of developers. Regardless, the identity of Bitcoin's creator became one of the great unsolved mysteries of the internet age. Bitcoin's story was far from over. New developments and challenges continued to emerge, each adding another layer to its complex narrative. As the world stood on the cusp of further technological and financial transformation, Bitcoin was poised to play a pivotal role in shaping the future. Its resilience in the face of adversity ensured that Bitcoin would remain at the forefront of the conversation. The journey of Bitcoin was a testament to the power of decentralized technology. It was a saga marked by triumphs and setbacks, by visionaries and skeptics. And as Bitcoin continued to defy expectations, its true impact on the world was only beginning to unfold. As Bitcoin continued to evolve, it began finding its place within the broader tapestry of global economics and technology. Central banks, once dismissive of digital currencies, started researching and developing their own versions known as central bank digital currencies, CBDCs. The rise of CBDCs underscored Bitcoin's influence as a catalyst for monetary innovation, pushing even the most established financial institutions to reconsider their approaches to currency. The Bitcoin community itself remained vibrant and diverse, comprising developers, miners, advocates, and critics. Conferences and meetups worldwide attracted thousands, fostering discussions that spanned technical improvements to philosophical debates on the nature of money and freedom. Bitcoin's open-source nature encouraged continuous development, ensuring the network adapted to new challenges and opportunities. In the geopolitical arena, Bitcoin became a part of the conversation among nation-states. Countries like El Salvador took pioneering steps by adopting Bitcoin as legal tender, a bold experiment in integrating cryptocurrency into national economies. This move sparked debates about sovereignty, innovation, and the role of cryptocurrency in emerging markets. Meanwhile, Bitcoin's cultural impact was undeniable. From memes and merchandise to books and documentaries, Bitcoin had embedded itself into popular culture. It became a symbol of the digital age, a testament to the transformative power of technology and the potential for decentralized systems to reshape our world. Amidst volatility and debate, Bitcoin stood as a resilient force, continually challenging the status quo and inspiring a new generation of thinkers and innovators. Its journey was far from complete, promising more twists and turns on the path ahead. And so Bitcoin endures